It's another edition of the Trading Tips video newsletter, teaching you how to become a successful trader today. This video newsletter is brought to you by firsthourtrading.com.
Welcome to this tradingtips.com video newsletter. In this episode, we'll be looking at point and figure charts. These charts are unlike any others, both in appearance and in the fact they do not even consider time. Intrigued? Let's continue. Point and figure charts consist of columns of X's, which represent rising prices, and O's, which represent falling prices. They're designed to filter out insignificant price movements. Time is not a factor in point and figure charts. This makes support and resistance easier to identify. Pictured here is a classic point and figure chart. Point and figure charts may be new to you, but they're really old. How old? They were invented in 1898 by an anonymous writer named Hoyle. He wrote a book called The Game in Wall Street and How to Successfully Play It. One reason for point and figure's popularity in these early days is that the charts are easy to write by hand. Even in today's age of iPads and smartphones, there's something to be said about actually breaking out the pencil and graph paper and making a chart. But how do you make a P&F chart? First, you need to determine your box size. Then you need to determine your reversal amount. Popular values for these are 1 and 3. A box size of 1 means that rows in your chart will be separated by $1 increments. A reversal amount of 3 means that a move of 3 boxes is required to start a new column. If your box size is 1, this would mean a $3 move would be required to start a new column if your reversal amount was 3. X's represent rising prices, O's represent falling prices. We'll take a closer look at another example on the next slide. This is a P&F chart made based on the closing price of a stock. At the beginning of our chart, the stock closed at $34.50, down from a previous close of $35, so it starts off with an O for a falling price. The next day, if the stock were up to $35, no mark would be made on the chart. Why? Because we're using a 3-point reversal amount, remember, which means that in order for an X column to begin, the stock has to go up by $3. New marks are only made in the O column if the price goes lower by at least $1 level, which is our box size. Remember, you don't make marks every day, only when these thresholds are hit. Now, what do we do with this chart data? Well, in this example, you can see that the rising lows, represented by O's, provided an ascending trend line that worked like support, while the flat X's made a solid resistance line. This was an ascending triangle, but you wouldn't have seen the bullish formation using a regular candlestick chart, one that considers every day equally. Sure enough, the stock here broke out predictably once there was nowhere for its lows to go without falling through that support line. So here's how we can use point and figure charts. The important things to look for are trend lines, both ascending and descending, and support and resistance levels. An argument can be made that these lines are more reflective of supply and demand than traditional charts. Certainly, cross-referencing these charts with traditional candlesticks is a great way for identifying the best stocks to buy or sell short. In the earlier example, we used the closing prices of a stock to make the P&F chart. There is another popular method, though, using the intraday high and low. Which do you use? Well, once the chart is started, you first check the direction it's already going. For instance, if the chart is using O's, check for the intraday low. If it's low enough to warrant another O based on your reversal amount, then the high is ignored. If not, then you check the high. If it isn't high enough to warrant an X, then no value is added. But if it is, then you begin a new column with X's. In conclusion, point and figure charts are unique in that they don't consider time. Columns consist of O's for falling prices or X's for rising prices, but never both in the same column. The idea behind P&F charts is that they filter out less important daily prices to find more significant levels of support and resistance, as well as ascending and descending trend lines. These trend lines have been found to be very instructive as to when to buy and or sell stocks. We hope you've enjoyed this TradingTips.com video newsletter. Thanks for watching and good trading.
This Trading Tips video newsletter has been brought to you by Manny Backus's First Hour Trading System. Every day there's money to be made in the first hour of stock trading. This is the world of day trading, not for novices, unless you have a system. The First Hour Trading System. Visit firsthourtrading.com now and sign up for a free 30-day trial. You could make enough in the first hour of your day to take the rest of the day off. View more Trading Tips videos. Visit tradingtips.com. Sign up for our free video newsletters and become a successful trader today.